coding agents is going to make every single one of us expert coders, and we will generate
Not me.
codes.
It's
Yeah,
not
We
I
me.
will.
still, I
Well,
still won't figure it
well,
out.
without you knowing, you will generate computer codes soon, very soon. I
Well, that's
guarantee you.
terrifying, actually.
Yeah.
Hey there, everybody. Welcome back to The Pursuit. And I am Mike Lucas, the CEO of TrueShares. And I've got with me, as always, Kevin Thornton, the head of sales for Advisors Excel and AE Wealth Management. And a special guest today with us is Sam Kim. Sam Kim is the managing member of Black Hill Capital Management out of San Francisco. And today's topic, which I think is extremely relevant, maybe the second most relevant topic after, can we get gas without having to take out a HELOC or something, right? I mean, the second most relevant is AI and deep learning. And, Sam, I know that you're an expert in that area, so we're happy to have you on. As usual, we'll keep this, I think, pretty lighthearted, but I was actually recently told that podcasts have a much better traction if they have expertise in the episode, and Kevin and I bring zero expertise to the table.
Yeah,
So-
that's weird.
Maybe you got the wrong guest today.
Maybe you have the wrong host is more like it.
You definitely got the wrong host. But I have a giant microphone now, and that makes me the host. It's like holding the I've got the scepter or whatever, right? So, Sam, happy to have you. And if you could, maybe for the benefit of the audience, a couple seconds on what you do and what your background is would be really helpful.
Sure. As you said that I'm a managing member of Black Hill Capital Management, and my background is 100% technology. I've been involved in technology. Investing technology includes the high tech plus life sciences sector, including biotech, for last 25 to 30 years. Couple of
That's
engineering
a wide
degrees.
spread there, Sam. Where did the other 5 years go?
Yeah,
They just disappeared.
yeah. I'm not too good at going back and figuring out exactly what I did 30 years ago. I've been doing this one for a while, and about 5 to 7 years ago, we kind of detected what was going on in the AI, and we decided to really focus on that and starting to uh, concentrate our bet on AI and deep learning space, which has been working quite well. We instantly manage three different portfolios. One is tech portfolio, high-tech portfolio, essentially, and two is life sciences portfolio that includes biotech and other diagnostics, healthcare-related diagnostics and analytics companies. And then third one is an ETF that, as you know, we are the sub-advisor to you guys, TrueMark, and we have been managing that ETF for a while. That portfolio is subset of our high tech and life sciences portfolio. And what's kind of interesting is that recently we made a dramatic change in all three portolios, and which is really relevant to that ETF that we are managing for you guys. And we can
I don't
talk
think you're
about
supposed to
that
talk
in.
about the ETF you manage for us. Anyway, let's
Yeah.
just say I'm looking forward to hearing about that ETF when we get off the podcast.
Sure.
But anyway, yeah. Sorry, I said keep going.
Mhm.
Tell us about the
So
changes you've been making in your
basically,
portfolios.
early March, what we did was we made a dramatic update, essentially getting rid of all the SaaS software application companies and the increase our exposure to semiconductor sector dramatically and the consistent with our long-term investment strategy, consolidate our cybersecurity positions into market share leaders like CrowdStrike, Palo Alto, and Okta, and the Cloudflare, and also
And now
added.
Cloudflare, correct, Sam, correct me if I'm wrong, but
Mm,
Cloudflare, you and Kevin and I met
mhm,
at an event a little over a year ago,
mhm,
and the host asked us on the panel to each pick a stock
yes.
for the coming year. I think
Mm,
Cloudflare was your pick,
yes.
right? I think Kevin picked Ford or something. No,
It's something terrible.
something
Let's just
terrible.
skip mine.
It wasn't terrible at the time,
Mm,
No, it
and
was a good call.
mm,
it was a great call at the time, and mine
mhm,
was super mediocre.
mm,
Um,
mm,
but we'll just say that you picked Cloudflare, so that gives
mm,
you some street cred here on the podcast.
mm.
Um, if it's okay with you,
Sure.
because look, you and I have known each other a long time, and we talk about this a lot, and I learn a ton from you on a weekly basis when we chat. Um, but for the audience's sake, and those that are not truly anointed with knowledge when it comes to AI, can we dial it back just a little bit and go back to the old days when you used to educate me from scratch, which was basically, look, there are four pillars
Mhm.
to AI, right? And what are those pillars? And that shift you just referenced, I know from what you've taught me well, that's one of those pillars that you're focusing on now, and I think putting it into context would really help the audience.
Yeah, but rather than talking about boring, like AI stacks, and then
Yeah.
the bottom layer is semiconductors, for example, and so on and so forth. What it'll be better, in my opinion, is kind of talk about a little bit of history, however short it is, the emergence of AI and this foundational models of starting maybe five, I mean, 3 to 5 years ago. And they'll be kind of interesting, put everything in kind of context.
Okay, that works for us.
So, so let's talk about what triggered our portfolio change, and that all began in the mid-January when Anthropic released the latest version of Claude Code AI coding agent. And by now, most people should know what AI coding agents are. But for those who do not know, they are a feature of foundational models like ChatGPT that allows anybody, I mean, anybody, literally, to generate computer programs,
Are
very
you listening, Kevin?
sophisticated computer
Yeah,
Anybody,
dude, this is
programs.
great. I'm taking
anybody,
notes.
literally anybody.
Yeah,
I'm taking notes right now. This is
yeah.
awesome.
I mean, even I could do it, and without knowing how to program. So it's literally general public. You can come up with any. Some people like they ask this non-programmer or non-coder or this housewife to come up with her own website, and she did it in 15 minutes with this AI coding agent. So it has just enormous power. So anyway, going back a little bit, and talking about the background of how AI has been progressing. A few years ago, when the AI foundation models like ChatGPT and so on become really good, everyone was really searching for killer apps, and everybody was talking about all these different possibilities, but pretty much very quickly started to focus on two areas. The first being a customer support area using chatbots, and which has been kind of progressing slowly, and without a lot of fanfare. And the this AI coding agent, which has been improving extremely fast. And naturally, we have been tracking this progress of AI coding agent capabilities for a while. And this kind of lead us to this event in mid-January. In 2 short years, less than 2 years, the capability of Claude Code went from the level of junior programmers right out of college to that of very capable senior computer engineers. Absolutely remarkable progress.
Wow.
And this implies economic consequences that was so shocking in that, think about that, monthly subscription to these coding agents like Opus 4.7 or GPT 5.5 are about $20 a month. And let's go nuts and say you want to go for a max version. That's $200 a month. Compare this to average about $350 to $500 an hour for average U.S. knowledge workers. And we are being extremely conservative with that because senior engineers in Silicon Valley these days, they make $500,000 to $1 million a year. So we are talking about just huge consequential change and disruption taking place. So this development puts so much negative pressure on SaaS application companies, turns out, and also extremely positive for anyone providing computer power for making this happen, and namely semiconductors. So we can talk about that. We're going to talk about why it's so kind of negative for SaaS applications, and we're going to take few logical steps. So let's talk about the coding agent and implication of that in SaaS application companies. What happens is that at first, ironically, coding agent will empower the highly skilled programmers, like those ones working at SaaS application companies like Salesforce or Workday and so on. And with this newfound power, their productivity will increase dramatically, and they'll try to put it to good use. And then what they naturally will try to do is come up with new features and functions and so on. And most likely they will be encroaching on the adjacent market spaces. And what's that going to do? That's going to increase pricing pressure and competition as well as pricing pressure. And this will also empower the SaaS users to create or replicate some of the SaaS functions on their own, reducing the number of SaaS modules they use. And this will likely to slow the overall growth of SaaS apps at the margin. Everything is happening at the margin. And if you think about that, think about the average corporate SaaS users use 300 to 400 SaaS app modules. So we are really naturally seeing big potential for consolidation in SaaS space.
But at first, it's going to be a catalyst, it sounds like. It'll increase productivity and then eventually replace the productivity of the SaaS space. Is that what you're saying? Am I hearing that right?
Exactly. And
Hmm.
longer term, so what really SaaS was about was that it has a very, very attractive seat-based pricing model, meaning that whether that person use the SaaS module or not, they get paid every month, as a SaaS application company. And that's will eventually go away. Um, and it will probably, my guess is that will, you know, will starting to happen is that it will be remarkably, it will be some form of performance based or outcome based pricing model based on the performance of AI agents that you'll be using. But for now, nobody knows what that's going to be. And my guess is that it's somehow related to number of tokens people use or token based usage.
Okay,
So
this is the moment when we take a slight break and tell Kevin to translate everything you just heard and repeat it
Yeah.
back to us.
Yeah.
by the way, the token
I need
mean it
AI.
definition of token means it's not the subway token tokens. It's a
He's
it's
starting to
a
get who he's on the podcast with right
Yeah.
now.
So
it's a
that's what I
yeah
wrote down bus token, but yeah.
it's a unit of knowledge. So normally people can equate it to a word or piece of information, or but you can equate that to piece of knowledge or quant- quantized piece of knowledge. Let's say
Hmm.
so. So so I know that we're painting a, very negative picture of this world as SaaS application companies. And but we don't know exactly what's going to happen. Some will survive, some will fail, some will go out of business, and so on. Important thing is the stock market is not waiting around to find that out. They're selling SaaS stocks for last several months, and average they're declining, 40, 50, 60, 70% since last October. So already market has been reacting to it. On the
So,
positive side, go
yeah,
ahead.
Sam, I was just going to say that you hear a lot of mixed opinions on whether or not there'll be a bounce in SaaS, right? In software.
Hmm.
And my generation, in some cases, we used to call that a dead cat bounce, right? And
Right.
I don't want the PETA people chasing down the podcast here, but not a literal dead cat, but the reality is, it's still a fait accompli in the long term, but in the near term, there might be still some value. And I think that equates to what you just mentioned, where in the short term, there's could be a actual bump in productivity or a bump in output, in these areas, but that's I think a near term effect, right? That's going to wane um, and then the reality sets in, right? Am I hearing that correctly?
Yes. Well, in short, this is what's happening. One, it's going to increase competition among the SaaS application companies. Two, that's going to put some pricing pressure. And three, that they all said that they're going to adopt and implement the AI into all their features. That's good,
Yeah.
but that's all depending on the execution ability of individual SaaS application companies. So we really do not know who's going to win, who's going to lose. But all I know is that large companies, large SaaS application companies will survive and may even thrive long term. But in my opinion, a lot of small niche based SaaS application companies will probably go out of business or get acquired.
Mm,
So that's my 2 cents worth.
okay. Well, that I think that lines up. So we've talked about who it maybe helped or hurt in the near term. Maybe SaaS companies, some of them are going to have to pivot or at least manipulate their business lines to adapt. But let's talk about the positives, right? So this created a ton of demand in other areas, what I call the pick and shovel areas of AI. Um, and what does that look like? What's the, why has that been a catalyst for the pick and shovel areas of AI?
Sure. Before we get to that, I'm going to briefly stay on the SaaS side a little bit. Uh, we still kept some software companies in our portfolio, and those are the ones that either AI needs, like Datadog. They're into performance monitoring. Um, for example, the Datadog, 10% of their revenues, Datadog's revenues, are coming from OpenAI,
Yeah.
because OpenAI needs some sort of a very accurate performance monitoring ability to measure their foundational models' performance, for example. And also we have companies like, we still have companies like MongoDB, great database that foundational models use. Snowflake, their database platform, and the Cloudflare. One of the many features that this company have is that it's ideal for AI inferencing. So there are like few software companies that they will actually do very well with AI and emergence of AI, and those we kept. So let's go on to more positive side, which is semiconductors. This is, again, I've been in this business for a long time, and I never seen anything like it in my life. The interesting thing is that recently, even less than 6 months ago, everybody, has been criticizing and accusing OpenAI for their so-called circular deals. So, they basically get the money from the AWS or Google or Microsoft, and it goes right back out to be used for capacity. Um, and but now they they look absolute geniuses, because they now have sort of, not quite, but getting closer to capacity they kind of need. Still not there yet, but kind of. Anthropic is falling grossly behind. I mean, they may have a little bit slightly better model, but they don't have capacity. So today they made two announcements. They signed $200 billion deal with Google Cloud. And they told XAI they're going to take all their capacity. All their capacity. It's getting ridiculous. So anyway, with that in mind, these AI agents and its development has been extremely positive for semiconductor industry, obviously. Kind of in short, what's happening is that AI agents do not sleep or take a break, because it's not human. It's a little piece of robots running around. So until it completes its task, an AI agent will operate 24/7 to continuously access all the available compute structure at their disposal. So when you go from, this is the key, absolute key statement that you should remember, everybody should remember, is that when you go from manually executing simple AI-based tasks like AI search, Like, you use ChatGPT, go there, and then you do manual search. To using AI agents, the compute need to run that agents explode by 10x conservatively. 10x.
So the
So
computing power, you need 10x. Is that correct?
10x, yes.
Uh,
Going from manual to agent, AI coding agent use, or AI agents in general.
And so that burden's fallen on their chips, obviously, right? I mean, this is
So
all. Yeah.
people used to think that the split between AI training and inferencing in terms of computing power was 40-60, 40% training, 60% for inferencing. I mean, that was absolutely grossly wrong in this new world of AI agents. Now people believe that inferencing needs for compute will be conservatively 5 to 10x of that of training load. And this is exactly why we are running out of compute capacity everywhere. Every hyperscaler, data center, neocloud, you name it, is running out of compute capacity already.
So how do we fix
so
that problem?
yeah, I
mean,
was like,
that's,
what do we do?
You can't. You can't. I mean, what you have to do is that you have to ask every single one of semiconductor people to increase their production by 3, 4, 5x. But unlike software or cyber world, the physical world, the real world, doesn't change that fast. You go to TSMC and ask them to increase their capacity, they'll say, yeah, we have a 5-year plan, 10-year plan. They don't say, yeah, we're
So
going to
we get to
increase
keep
it
our
by
jobs for
2x.
another 5 or 10 years? Is that what you're telling me? Like,
This means we're going to have a explosive growth in semiconductors a lot longer than people think.
Hmm.
And this is the reason why I think that this frenzy in semiconductors, believe it or not, is just a beginning, not
So
ending.
go ahead, Kev. I cut you off.
I was just gonna say, like, so what companies in the semiconductor world are you keeping an eye on investing in? What are you watching? I mean, obviously you've got the Nvidias of the world, like, but what other things in that area are you watching?
Well, believe it or not, uh, Nvidia, you are not going to get the highest kick from Nvidia
Okay.
because they have been sold out of their capacity for foreseeable future. So only thing they can do is they can raise prices, but they're not going to raise it too much. The biggest bottleneck is TSMC. TSMC can only increase their capacity so much. And being such a amazingly nice guys they're increasing prices by only high single digits. I mean, this is amazing. While their customers, like, AMD or other people, they're raising prices like sometimes 100%. So all the benefits and stock prices go to the semiconductor product providers. If you want to, Kevin, if you want to know what those companies with who we think are going to be benefiting a lot, just check our portfolio. That has everything.
For
Well,
sure.
almost. Like Micron. I mean, it's a absolutely pure commodity. But they've been raising prices. I think the price went up by 100%. And I never seen this in my life. 30 years of investing in semiconductors. I never seen this before in my life, which is all this memory guys, whether it's DRAMs or or SRAMs or flash memories. Now they are asking for prepayment up to 2 years. And Sanders a couple days ago reported that prepayment is now up to $14 billion.
Wow.
I mean, this is mind-boggling. So that's what's going on in semiconductors.
So, Sam, when you've got prepayments going on and capacity constraints, and you've got uh, limited inventory but orders going out 3 to 5 years, how does the market price all that in, right? Because you're going to see a lot of that front loaded, it seems, and eventually you either expand capacity or they flatline.
Well, everybody's expanding capacity, but lead time for fabs are like 2 years.
Hmm.
I mean, there's no way that they could go from, I don't know, like X to 10X. They could go maybe 1.2X, next year, and so on. And what's interesting is that the biggest bottleneck is TSMC. They've been kind of reluctant to increase their capacity too much. So if you look at TSMC, they're also very loyal, people, and they always stick with their best customers. Who are their best customers? Apple, the most important. Second, AMD. Oh well, sorry. Before that, Nvidia. Who's third? AMD.
Hmm.
What's fourth or fifth? Qualcomm. So if you go down the list, there's no accident why AMD is up 20% today, or 17% to be exact. Because they have the market share, they have the better CPUs than Intel, and they have capacity at TSMC. That's how it works. And even Qualcomm, that's like almost laughable. They don't have anything, anything goes into data centers. But they just because they made an announcement, they said, "Oh yeah, we're going to use ARM's IP to create CPUs or GPUs that we are planning to get into data centers." Stocks up huge. Why? Because they're one of the top customers at TSMC. They can secure capacity.
Hmm.
So it's a wild, wild world right now.
Sounds
So
like it. Good,
It
good.
is.
do you see, like, obviously that kind of leads into, with all this computing need and power, like data centers, um, like what like companies in the data center universe are you a fan of?
Well, again, just look at our semiconductor holdings, and that's basically what we like.
Okay.
Other than them, some power like turbine people and so on. But again, they're commodities. Uh, I don't, and then because of their long-term lead and long-term price contracts, uh, very little they can do. Again, this is what we are dealing with.
Hmm.
Going back to semiconductors, it's kind of related. Let's talk about why people are having such a hard time in semiconductors to keep up with the demand. In semiconductors, we had a steady, brutal consolidation for last 25 years. So, for example, in analog, we started with probably 5 or 10 analog semiconductor companies. Now we have basically one dominant one, analog semiconductors. Same thing with digital semiconductors. Lots and lots and lots of uh, semiconductor chip companies out there. Most of them were sort of commodity. They all got acquired by Texas Instrument and National Semi, and then Texas Instruments acquired National Semi. So now you have one. And it goes on and on and on. Look at the semi-cap space. Now they got like 5 controlling different segment of fab equipment. So all these people during the consolidation, they were so reluctant to add additional fab capacity aggressively. Same thing with memory people. They were burned so many times before. Every time they add capacity, their semiconductor upcycle is over, and they go through a brutal correction. So because of that, they have been so reluctant to add capacity for last 2-3 decades. Now we are paying the price.
Kev, I got a question for you while we're doing this.
No.
You deal with advisors as much as anybody, right? And in your interactions with advisors, how much does a topic like this come up? Is there significant interest in the advisor space regarding AI and what's happening in that segment?
Oh yeah, for sure. The question constantly comes up of what's next, and I mean, where to invest and what to like, how to take advantage of this type of stuff. And so, like, listening to Sam talk, like his types of portfolios are perfect for what our advisors are looking for their clients. Because I mean, the advisors are getting questions from their clients about it because that's all you hear about is AI is the huge buzzword. And it has made things more efficient for so many different companies across the country that, it just naturally comes up for them of how do we invest in this and where do we need to go. So you leave it up to smarter people like Sam to make those decisions in the portfolios.
Yeah, it makes sense to me. You know, when we had lunch yesterday, maybe it was after lunch, the idea of the fiscal house
Yeah.
came up a little bit, right? Which I found really interesting and easy to digest. But where does this pop in? Like, where does this asset class land in the fiscal house?
Well, so this would be a very aggressive type portfolio. So you'd be looking at the roof on a fiscal house perspective. Um, you know, the fiscal house essentially is you have your foundation, which you're most conservative with. You don't want that to shake. You don't want that to move. You have your sides of the house, which are going to be kind of the core of your portfolio, which are going to be well diversified, stocks, bonds, etc. And then you have your roof, which is going to be you're trying to knock the cover off the ball, take the roof off the house, really shoot for the stars kind of deal. And so AI and those types of investments in the technology space, like those would definitely fall in that spot.
Yeah, yeah, that lines
And
up for me. I mean, it's clearly a growth segment, right? An
yeah,
alpha seeking segment, and the potential's there.
yeah, absolutely. And it can add a ton of alpha, like you said, to the portfolio when you have companies like I was looking up Micron on while Sam was talking, and like since 2010, Micron was at $10 a share. It's now at $657 a share. It's like those are the types of investments that can definitely make you in this industry. Not saying you go out and buy Micron. That's a full disclaimer. I'm just saying, like, those are the types of investments and companies you're trying to look for and why you should utilize a professional portfolio manager like a Sam.
Mm.
Well, let's talk about Micron briefly. So I've been tracking this company again forever, but I remember that as soon as I heard that the current semiconductor upcycle started when Micron was $68. And then I tracked it through because I never really participated in the semiconductor cycles ever because semiconductors tend to be very cyclical. And we tend to chase after secular growth, meaning that companies that will grow year in, year out consistently over time. So that tend for us to favor the software companies and the or cybersecurity companies and so on. But story changed clearly with this AI coding agent development. That's when I knew Micron went from a purely cyclical story following through the normal next semiconductor cycle upcycle, and the down cycle will come predictably, into secular growth stories. And you could kind of figure out, based on what we just talked about the semiconductors and what's shaping up. You know that it's going to be secular growth story for at least for several years, because supply chain in physical world, in fabs and so on, it's going to take multiples years, if not decade, to catch up to demand at this point.
Interesting. You hear everywhere, and we see it, obviously. We see how quickly AI has impacted our daily lives and how it's impacted different industries. And you hear about the speed at which it's changing and all the different things. But you often forget about the idea that, honestly, it can only impact us at that rate, provided capacity continues to expand, right? So capacity ends up being the anchor on AI on a relative basis, right? It's still a juggernaut, but I think maybe the timelines that people are so worried about are aggressive if capacity is such a constraint moving forward.
Well, I mean, think about that. Coding agents is going to make every single one of us expert coders, and we will generate
Not me.
codes.
It's
Yeah,
not
I
gonna
still,
work.
I
Well,
It's not
still
gonna work.
won't figure it
well,
out.
without you knowing, you will generate computer codes soon, very soon. I
Well, that's
guarantee you.
terrifying, actually.
Yeah,
That's-
yeah, it will. And see, that moves in blazing speed. For me to sit here and say, gee, I'm going to create my own website. I'm going to get it done in the next 30 minutes. So that is going to require huge computing power that we don't have. So there's a huge mismatch between what's going on in cyber world and what's going on in physical world. So that's creating supply chain constraints.
Okay, that's a perfect way to phrase it, actually, because that resonates with me.
And that is getting wider, not getting narrower. Every day we spend with the coding agents, instantly, I was trying to come up with my own dedicated AI server so that I could protect my own data to run my own open AI, open source, or open claw, which is open source AI foundational model locally. Ideal one is Mac Mini, Apple Mac Mini. So I went to try to buy one. I could not find one anywhere on earth right now. Every single one of them are sold out. Every single one. So I finally went to Apple website and I tried to order it. First of all, they raised prices from $500 to $700. And two, I have to wait 3 months.
Wow.
And what I'm hearing is that I hear people buying 20, 30, 50, 100 of them at a time.
Wouldn't they put a limit on how many you can buy? I mean, if you go buy tickets to a sold out event or try to, they're going to say you can only buy 4 tops.
Yeah.
Like, how,
Well, you just walk into this B&H Photo, which is in Lower Manhattan, and you give me 20 of them. And then you go next door, you buy another 20, and you could do that. And pretty soon the inventory will run out.
So where does the dam break? Like, where does capacity catch? Well, let me put it in the terms that you just gave Kevin and I, which were very appropriate for Kevin and I. When does the cyber world and the physical world, when does the physical world catch up? Meaning, when do things like capacity catch up to what we're doing in the inferencing and learning space?
We don't know. Only reason that the only way the physical world will catch up to cyber world is if somebody tomorrow come up with some algorithm or schema or something to make inferencing extremely efficient, and the need for power by reduce it by 10x, 5x, even
Hmm.
2x. They'll change the trajectory, but for now, nobody's coming up with that yet.
You once mentioned to me that AI is going to help solve the power crisis for AI.
Hmm.
Is that you still sticking to that one?
I guess.
Yeah. Until proven otherwise, yeah.
AI will figure out the most efficient way of doing it.
Yeah.
Again, to me, power is not that difficult to fix. I mean, everybody's talking about nuclear, and that's nonsense in a sense that it's not short-term solution. I mean, that's why people are buying, the jet engines from GE or Rolls-Royce or whatever. That's fine. Um, but people are buying any kind of engine possible to run it. And eventually people make more and more. I'm not too worried about that. And also AI, they actually figured out how to make the power, the data center power, a lot more efficient recently. This guy who used to work at, this is old story, probably a couple years old. He used to be a engineer at one of the Google data centers, and he was using deep learning to figure out how to make their power use more efficient. And he found that AI can reduce by 50%, which is big. And he came out and founded his own company.
Oh, wow.
So fixing power is not that difficult because it is very efficient at this point. That's just my opinion. Everybody's panicking, but I'm not too worried about that.
All right,
To
so
me,
you're
the
not
bottleneck,
panicking over power.
yeah,
You are panicking a little bit over capacity, but that is just a physical limitation is what it is.
yeah, I mean, it is what it is. Unless TSMC figure out how to increase their capacity by 5x this year or next year, um, nothing's happening.
So where do you think the the inflection point is? Say maybe we're already in it, right? But if capacity really isn't going to get solved for 3 to 5 years, uh, is the inflection point really still 3 to 5 years away? Like the speed at which we've seen things change and improve and develop recently, which is remarkable, is that arguably a fraction of the speed at which things will change once enough capacity comes online?
Well, believe it or not, well, we are talking about the capacity you need right now. That that doesn't. We still gonna have a huge capacity constraints. That doesn't count the potential future capacity needs that you need incremental to what we have as AI becomes more sophisticated. So we're
So,
not talking about any of the future needs. We're talking about the capacity right now.
yeah, I get you. So honestly, something revolutionary has to happen to
Right.
cure this cycle.
Well, people are smart. I mean, so I'm sure they'll come up with something.
Yeah. Yep.
But until then, capacity constraint stands.
Well, that's been an hour, folks, or close to it. Was that enough to digest, Kevin? Did we learn enough there?
Ooh, Yeah, I took 3 pages of notes,
This
so
sounds
that
like
was good.
dabbled at 1994 or something. Very,
Right,
very.
can we go back in time so I can go buy all those stocks that you mentioned? Uh,
Yeah, hey, Coinbase is on sale, Kev.
yeah,
That one's
it
good.
is, it is. I know a guy that really likes it.
Uh, Sam, listen, thanks for taking the time today. I think this is fantastic material for any level of audience, whether it be investing or simply the curious. And it's a topic that's going to persist for quite some time here. So we'll have you on again. In the meantime, I think we'll take it in bite sizes because, as everybody knows, Kevin and I need things in very small doses.
Yep.
And that was a perfect sized chunk of AI knowledge you just bestowed upon us. So we thank you for it.
Yeah, thanks,
Thank
Sam.
you. That was fun. Thank you.
Killed it.
All
Bye.
right, everybody. Thanks, Kev. And if you want to check out this episode, obviously, if you've seen the previous ones, you know they're all on Apple and Spotify, and on the True Shares YouTube channel and a bunch of other places. So if this episode interested you, check out the others, and hopefully we'll see you again next time.
See you guys.